Welcome everyone to Stock Talk on July 5th. So I realized that the last time I did the Stock Talk was on June 12th, so it's been almost a month. It's time for an update for everyone on YouTube, so let's talk about it. In the last Stock Talk, our theme was that the market is resilient. You've now seen the resiliency play through with the S&P 500, with the Dow, with NASDAQ, all making new highs. So, what's going to happen next? Well, that's a great question. So we'll tackle a couple of things that we're looking at on the charts. This is the S&P 500 daily time frame, and this is on the past year. Now, what you've seen here is the resiliency in the markets after this minor collapse, and this was quite significant, our retracement. We've gone up and made new all-time highs yesterday, actually 2 days ago at 298.82. So a lot of people are thinking that, well, we made the new high. Didn't we make a new high here and then started collapsing? Can we still have that scenario and we retrace a little bit? Yes. In a bull market, we have times of retracements. We have times in which we move higher. We know that the times in which we move higher exceeds the days in which we move lower, right? So if we get a retracement in the next few days, it could very likely occur. But that doesn't mean that the bull market is over. What I want to caution everyone is, if we get a scenario in which, so let me show you the 20-year daily time frame. So if we get a scenario in which we start pushing towards SPY 300 and SPY 320, okay? So if we start breaking this resistance line of 302 and it looks like we aren't stopping, okay? Want to caution that once we get that melt up scenario, that there's a greater possibility and a high likelihood that we'll get a snapback after. Now, we won't see that until after the fact, okay? But the thing about this is, if we move to above $302.40 and we start moving up in a rapid fashion, we may be met with several green days in which it looks like there will be no sellers on board, no one wants to short, everyone wants to go long. And when the last person goes long, it will snap back to the norm, okay? And that snapback will hurt for those people who join late. What's the big deal here? The big deal here is that the market has run up quite a bit. We are looking for retracement. We don't see any signs of the retracement just yet. So, giving you those two sides and those two scenarios for all of you to ponder at this time. You want more updates? Come check out the course. Come check out the group. Always discussing the stock market, especially during the trading day every day. When you look at this chart, we're in unknown territory. Where is the resistance? This is the only noticeable resistance of 302 up here that we can see. Your support levels will have to be a little bit lower. Your support levels are down in the 50-period moving average, I think ultimately around 287. All right. So, you know, with all the naysayers out there saying that there is a possibility of a recession going to all-time lows, look where they are at the broad markets. Look where we are actually at in the broad markets. All right. So if you say this is a bear market, look at where we are right now and you tell me that's a bear market. So far, that train of thought has been proved incorrect. When we look at TVIX or volatility, you can see that TVIX has been continuously making a lower low, and that volatility continues to drop on a daily basis. So there's no reversal at this time that we can see for TVIX. But if we do get a retracement in the next few days, TVIX will be elevated. Will TVIX be a good play for retracement? Maybe not, because if you think about it, TVIX is a good play when all indices are dropping, right? And if we don't see that in a bull market, then you might have just these 1 or 2 day random spikes, and then that's that. So it's hard to time with TVIX unless you're constantly watching this and seeing where volatility may be moving. So right now, this continuously makes lower lows and lower highs, showing a consistent downtrend. Crude oil. So here's crude oil. And what you can see here is crude oil is developing a couple of bear flag scenarios. So what you can see here is that the first bear flag was up here, and the second bear flag is in progress right now. So this is actually a bear flag pattern that actually can play out back to the downside again. What we really have to monitor is once it hits the 150 period moving average around 56.34 to see if we can hold that level. I think that's going to be a pretty important sign that if we can hold that level, we can have time to negate this red candle, and then that could form a bottom for that next push higher. But for what it's worth right now, this should push back towards $56 and change just based off of this chart alone, and that this is on a downtrend short term, though on the long term this may be proven otherwise. With natural gas, we see this analysis change slightly, in which we had a nice push by natural gas back to the upside. So I'm looking for a little bit more upside. The thing about this is that we are close to the 50 period moving average, which has acted several times as resistance, and that is at 2.462. Look for that to act as resistance this time around as well. So a little bit more upside. But if we can get over, potentially more upside towards the next resistance of 2.567. So there you go, natural gas. With gold futures, you can see gold right now consolidating towards the right. So this is actually gold right here. You can see gold had a pretty nice and decent up move, followed by a consolidation to the right. In typical fashion, this results in another push higher. So we'll have to be monitoring gold right now as well. But so far, this is consolidating to the right. This actually might take longer. It doesn't have to take that, but it could take longer than you expect. So this could actually consolidate for a while to the right, but without amidst like pretty high intraday volatility is still certainly here. But this should continue pushing higher for gold just based off of this chart pattern alone, until we see some signs of deterioration. If we can see a topping area, something like this in the next few weeks, and that we can't exceed this high or start breaking support levels, then we would say that this has reversed, this was the top. But until then, we have to give it to the bulls for the gold that this is likely pattern to push higher. Okay, so that's gold and everything. Let's take a look at some of the comments. Addy Boy, can you please check out GRUB? Thank you. So this is Grubhub. GRUB. All right. So so this is 3 weeks ago. This has been a while. So this is GRUB, and this is pushing to the upside in the short term. So when you look at some of these things, this is on the short term uptrend. Where's your resistance? One of your very strong resistance levels is $86. So you have to keep that in mind, that at $86 it is a resistance. But then we're also coming towards the 200 period moving average, which is a resistance as well. So while on the near term, so here's the deal with this, right? Near term it looks like up, consolidate, we can have another push up, but we really have to monitor this 200 period moving average slanting down. That area can act as a resistance, followed by an area of $86. So just be careful. While there's a lot of potential for this one to potentially make up, we have resistance close by. So this is a good one. Good job. Albert, ouch. Those dips must hurt looking at it last 6 months or more. Great analysis. Thank you. Prashanth, Kevin, great video as usual. Looking to take a position on the following tickers. So let's take a look at one of your tickers, but I recognize most of your tickers. The reason is I recognize those because those are high flyers. Look at Viva Systems right now. It's a high flyer. So while high flyers are nice, you just want to be a little bit careful. If you get some profit, it's always good to take a little bit off if you get that profit, especially if you're in these high flyers. But so far, you can see that this is on a consistent uptrend. VEEV, there's nothing wrong technically with this chart. Everything about this chart says bullish, bullish, bullish. So I like it. It's a good chart. This is on an uptrend. If you want your, the thing about this is this, all right? The thing about this is this. Here's the problem. What I don't like about this chart is look at this slope. Do you see the slope? This slope actually is greater than 45-degree angle, okay? And when it's greater than 45-degree angle, I'm a little bit scared at an entry right now because it needs to consolidate to the right or consolidate a little bit lower. And when it slopes so quickly higher, when it starts taking some of it back, it's hard to find a support level. And what I mean by this is if it starts dipping, if this level 156 doesn't hold, it easily just goes back to 142 or 143, which is next. And that level, that's a pretty big chunk right there, right? So you just want to be a little bit careful. If you're in it, it looks great. But if you're not in it and you're considering entry, you just want to, kind of take it, maybe have a stop ready, just ready to go, just in case this doesn't go your way. But look, this slope is just a little bit too steep. All right, Alan. Good analysis. SPY, 5 green candles overtaking negativity. So yeah, I provided the analysis of SPY of these green candles here overtaking the series of red candles, how the bulls were in control. Look at where we're now. Continuation upwards, right? Eric, can I take a look at BABA? Yeah, absolutely. So BABA, I like. This is one of my this is one that I would be looking into. The reason here is this. You see BABA, right? And when I look at this, right? Look at this greater. Oh, this is actually not even. This is approximately 45-degree angle right here, right? This move higher. But look at what happened after we started stalling for BABA, right? We get these rapid whips and movements up and down, up and down. And this is actually consolidation. This is its way of consolidating after such a major move during this year, right? So for VEV, I'm not saying that every chart does the same thing, but this is something that it could do. Even a solid stock like Alibaba, this is something that it could do. So we get these whips, and these whips, by the way, these patterns take a long time, right? So when you look at this from here all the way down here, this is 183 days, and then we whip back up, back down. It looks like we're going back up again. These are taking a long time to play out, and for a lot of people, waiting 100+ days to get a gain, a lot of people don't have that patience. But if you do have the patience, you're good. You're good on a solid stock like Alibaba because you're not going to be whipped out. You're only going to be thinking, okay, this might present a better opportunity to add in potentially to the stock. So this right now is on an uptrend. This is clear. We're about to get a 2050 bullish cross on the daily. Not confirmed yet, but we're almost there. and we would look for this to hold as support. So this first area would be a gap area around 170.83. Look for this area to hold as support first, but this is on an uptrend right now. What we've been seeing here is possibly a wedge forming. So if you can see price compression going on right here. So if we price compress this, you can see that there's more upside before we go down, and then it will have to move one way or the other. Same as this, when we have, you can see this expansion, right? This movement expansion. This is a higher high, our higher low, and then when we broke down out of this pattern, it did continue on lower. You can see these trend lines. All right, so there you go. Alibaba, thank you for posting that ticker. Eric. Coolio Friday will be, that was a quite long ago, your comment. So yeah, the retail sales report. Steve, thank you for coming in. William, appreciate your analysis as well. And then we got a Russian name that I can never pronounce, but glad to take a look at this. So when we look at ECA, you look at this trend, right? A big down move followed by a consolidation. So this is almost like a bear flag. And when we broke down, we continue breaking down here. So this is not one in which I would be chasing the lows, in my opinion. This can easily continue on lower. What's happening right now is, first, it teaches people a lesson here that the bear flag broke down. Now it's attempting to teach another lesson in an attempt to make another bear flag for another push lower. So this is going lower with all the moving averages pointing down. So likely direction continues to be lower. Giants, Rico. A lot of banks buying oil will reverse. I think you're right about oil a little bit. And then you bought CRM. Going long, CRM. So CRM is one that I've been looking at quite a bit. And you can see how, there you go. Especially when you look at this angle, see this angle, sustainable, unsustainable angle. This is a 45-degree angle. And now what it's doing, this year-long movement up is now resulting in whipping up, down, right? So it's continuously doing that in attempt to consolidate. Now, consolidation is normal. Consolidation can take some time because of this massive move higher, but this is a solid ticker. Here's your support level of 149. This has been held many times in the past. Look for that level to continue to hold in the near future. I think if we break below, it is bearish. If we break above, it continues to be consolidating and bullish. So that is that for CRM. Okay, so hopefully you understood this analysis. Check out the course, right? The link is in the description box. The Facebook group has a link to the course as well. What's in the course? Well, all the concepts and topics that I teach, the indicators that I use when I trade, and then, just trying to make the best decisions possible. Every single trade, you're using your own money, so you should attempt to make the best possible trades because you worked hard for it. Thanks everyone for watching this video. Talk to you all soon.